This is Campus Currency, and we're back with part 8 of 9 of the FAFSA application process. In this video, we're going to be entering the student's other financial information, and this could include spouse's information as well. Keep in mind that the FAFSA application is for all students applying to college, so this could also include non-traditional students that are older that may be married with children. You can see along the top of the menu there, we are on the student financial section, and they are asking for benefits and income received during calendar year 2019. So the first line item they're asking about is combat pay or special combat pay. Now this should be 0 for enlisted persons and warrant officers, including commissioned warrant officers. In order to figure out if you have taxable combat pay, the taxable amount is calculated by taking the total combat pay from the service person's leave and earning statements and subtracting the untaxed portion, which will be reported on their W-2 in box 12, and it's going to have a code of Q. The next line item asks about student college grant and scholarship aid reported to the IRS in your income, and this would include AmeriCorps benefits, as well as grant and scholarship portions of fellowships and assistantships. And this is for the student. And so if you're already enrolled in a prior year, you would have received a 1098-T tuition statement at the end of the year from your school, and there will be amounts on there. And you need to read through IRS Publication 970 because not all students will have to report this information or this income on their federal tax return. But genuinely, you're reporting any taxable portion of a scholarship, a fellowship grant, or other grant in the wages, salaries, and tips line of your 1040 federal tax return. The next line item asks for education credits, and you can find that. It's located on IRS Form 1040 on Schedule 3, Line 3. And so you can see here we have Schedule 3 from the tax return for 2019, and Line 3 shows the education credits, which in this case would be $1,500. The next line item asks for untaxed portions of IRA distributions and pensions, and you can get this amount from taking the you're going to add the lines 4A plus 4C from your IRS 1040, and then you're going to subtract out 4B plus 4D. Now you want to make sure you're excluding rollovers. This is a common mistake that many families make, is that they include the rollover amounts. You do not want to include those. So in this example, you would take lines 4A and add it to 4C, so you would get $2,000. And then you would subtract out the combination of 4B and 4D, which is $1,300. And so you would report $700 as the total in this line item. However, if it does say that it's a rollover, so if you were just cashing, or if you're rolling over your pension or annuity to maybe another company or a different plan, and you're not actually cashing out the annuity or IRA, then you're not going to report the untaxable amount. If you did, however, take out some or cash out some of that pension or annuity during the rollover process, it is already noted in lines 4B and 4D, and that will carry through to your adjusted gross income. So you don't have to do anything here. But generally, if it's a rollover, you're not going to report anything in this line item. The next line item asks about IRA deductions and payments to self-employed SEP, Simple, KEO, and other qualified plans. And this can be found on your IRS Form 1040. It's going to be on Schedule 1, and it's going to be the totals of line 15 plus 19. So if we look at Schedule 1 here, in the second part of Schedule 1, on the bottom of the schedule will be the adjustments to income, and so it would be line 15 plus line 19. So in this case, you would report $7,000 in this line item. And then finally on this page, they're asking you to report tax-exempt interest income, and that's going to be IRS 1040 line 2A. And you need to be careful with this. This is another one that it's a common mistake for families to make. You're only reporting on 2A, the tax exempt interest, which in this case would be $75. You are not reporting on the taxable interest in 2B, which is a common mistake. The next set of questions is going to also be looking at 2019 calendar year information. And the first line item they ask about is child support that you paid because of divorce or separation or as a result of a legal requirement. And I highlighted paid here because in a further section they will ask about child support that is received. Now in this case, you're not going to include support that you paid for children that are living in your household. So if you are remarried and your spouse has children from a previous marriage and those children are living in your household, even though your spouse is paying child support to the ex-spouse, you are not going to report that payment in this line item. It's only if those children are living outside of the household. The next line item asks for earnings from work under a cooperative education program offered by a college. So if in 2019 you were enrolled in a cooperative education program, you're going to report those amounts in this line item. Now, a cooperative education program is a program where the college balances classroom theory with periods of practical hands-on experience. So you'll actually be working full-time for part of your year of study and then in the classroom for the other part of the year. So any earnings from that program need to be reported here. And if you're working a separate job in addition to that, you're going to need to separate that out on your W-2s and what's being reported in your taxes. And the last item in this section is going to ask for taxable earnings from need-based employment programs such as federal work study and need-based employment portions of fellowships and assistantships. So if you're working, doing work study through the college, or any other need-based program such as a fellowship or assistantship, or your spouse is, then you're going to enter that amount here. Remember, this information is for the student and the spouse if applicable, because these applications are for all students going to college. And we get to the next section, which is student untaxed income, which is also looking at calendar year 2019. And this is where the first question you're going to see in this line item is child support received for all children. So this is regardless of where the children are living, you're going to report any child support that you or your spouse received. And you're not including foster care or adoption payments. The next item looks at housing, food, and other living allowances paid to members of the military, clergy, and others. Let's start with clergy members. So for instance, if a clergy member is working for a church or temple or synagogue or mosque, they tend to sometimes get a housing stipend as part of their employment agreement. Usually that amount's reported on the W-2, but not necessarily. But that amount would need to be reported here. When they're looking at others, this could be a situation, for instance, where maybe you've been working for a company and you worked overseas, and as part of your salary arrangement, you were provided housing. That housing amount or stipend would need to be listed here. Now, when we're talking about members of the military, there's a couple of caveats here. So you're not going to include the value of on-base military housing, and you're not including the value of basic military housing for allowance for housing, known as the BAH. What you are reporting on here, though, is the BAS, which is the basic allowance for subsistence, which covers military members' meals. Now the next one I put a star next to because this is probably the most common error we see in the financial aid office when it comes to filling out applications, and this can definitely be detrimental to your financial aid eligibility if you misreport or do not report any amounts. So you need to report any payments to tax-deferred pension and retirement savings plans, either paid directly or withheld from your earnings. Now this is most likely found on your W-2 in boxes 12A through 12D, and they'll have codes of either D, E, F, G, H, or S. but it's not necessarily going to be in box 12. So for instance, if you're a state employee that contributes to a state retirement system, and it's on a pre-tax basis or tax deferred, sometimes that is in box 14. The other thing you want to do is make sure you don't include the amounts reported in code DD in the box 12 section, because DD is the employer health contributions, and that's often a mistake that's occurs as well on these applications. So in this instance, on this W-2, if we go over to box 12, you can see they do have a code of D with an amount of $1,234, and that amount would be reported here. The next line item looks at veterans' non-education benefits such as disability, death pension, dependency and indemnity compensation, and or VA educational work study allowances. However, you're not going to include an amount in here for your Montgomery GI Bill, Dependents Education Assistance Program, VA Vocational Rehabilitation Program, Veterans Educational Assistance Program benefits, or post 9/11 GI Bill. Those are excluded from being counted. And then we're looking at other untaxed income not reported, such as workers' compensation, disability benefits, etc. So this could be also untaxed foreign income, untaxed portions of health savings accounts, but you're not going to include these following items listed in the box. And these are mostly the benefit programs such as welfare, untaxed Social Security benefits, supplemental security income, etc. And you can read through these to see what is to not be included. And then finally, as a last catch-all, they want you to report any money received or paid on your behalf that's not reported elsewhere on this form. So this could be money from a parent or other family member or even a friend that decides to maybe give you money as a gift. Let's say you're a younger student and you've just graduated high school and you received substantial monetary gifts. You do need to report those amounts in this line item as well. And then finally we get over to the student assets section. There are 3 different variations of questions that they ask about for assets. The first one is going to be, what is the current value of your cash savings and checking accounts at the time you complete this FAFSA application? The next line item is looking at the net worth of your investments, including real estate, but not your primary home. So let's take a look at this a little bit more in depth. So your investments include other real estate. So if you have a vacation home or a rental property, maybe you even own a motel or you have Airbnbs, you're going to report the net value of those, but you're not reporting the home in which you live. It says parents here, but now we're at the student assets. So if you're an older student and you're in school and you own a home, you're not reporting your primary home. However, if you do rent out a portion of your primary home, so let's say you have a unit within your family home that has its own entrance, kitchen, and bathroom, and it's rented to somebody other than a family member, you do need to report that as an investment asset. Now the way you would do that, let's say for instance, let's just use this example. Let's say the total area of your home is 1,000 square feet. And the market value of your house, if you were to go out and sell that house today, it's worth $100,000. And you still currently owe $60,000 on that house. And so you have $40,000 of net value or equity. And then let's say you maybe fixed up a room in the house or the basement and to get some extra money, and you're renting it out to somebody that's not a family member. It's got its own kitchen, entrance, and bathroom. And we'll say that it's 100 square feet, so 10% of the total square footage of your house. So what you're going to do is take the $100,000 market value of your house, multiply that by 10% to get $10,000, and then you're going to take the value of the mortgage debt that you owe, $60,000, also multiply that by 10%. So then you have $10,000 of market value for the rental unit with $6,000 of associated debt. And so you'll subtract those two to get $4,000 of real estate investment value that you would report here. Now going back over to the right side, you're also going to be reporting on trust funds, money markets, mutual funds, certificates of deposit, stocks, options, bonds, securities, installment and land sales contracts. And then when we get to qualified educational benefits, we know this is a big one. Here is a box listing all of the different types of educational savings plans and how they are to be reported. So as a student, you're going to be reporting a Coverdell account if you're the account owner, 529 college savings plans, and prepaid tuition plans are assets of the account owner, which in most cases is going to be the parent if you are considered a dependent student that must report your parents' information on this FAFSA. The UGMA and UTMA accounts are almost always going to be a student asset. And then the Series I and EE savings bonds are also assets of the registered owner of those bonds. So investments that you're not including to report here is the home where you live, unless you're renting out a unit like we discussed earlier. Cash savings and checking, which was already reported in the previous question. You're not going to report on ABLE accounts, which is tax deferred monies that can go into an account for persons with disabilities. And of importance that a lot of families make a mistake on is also you're not reporting the value of life insurance, your retirement plans, 401k plans, pension funds, annuities, non-education IRAs, KEO plans, etc. So the reason I highlighted in red the retirement plans and 401ks is because it may be a little confusing, because in a previous section we had said you do have to report the pre-tax deferral for the calendar year that you are working that shows up on your W-2. You are reporting that amount, but you're not reporting the total value of all of your retirement plans that are existing. You're only reporting the tax deferred amount for the year in question. And finally, investment value means the current balance or market value of these investments as of the day you submit the FAFSA, and the debt is debts associated with that investment. So you can't use and say you have credit card debt unless that debt is directly associated with one of the investments that were reported here. And then finally, as of today, what is the net worth of your current business and or investment farm? And you're not going to include a family farm or a family business that has 100 or fewer full-time or full-time equivalent employees. So let's take a little bit further look into this. So if you do have to report a business, so let's say you have, let's say you're a mechanic and you own a garage, you own the building and the land that it sits on, you own the machinery and equipment inside, you have a lot of inventory. That is what you would report on. What is the market value of the land in the building? If you were to sell it today, what's it worth? And then you would subtract out the business debt. So if you have a mortgage on the building or the land, and if you owe your creditors for the inventory you still have in stock, and maybe you took personal loans for machinery, equipment, you would subtract out that debt. But you're only reporting a business value in this line item if that value of the small business you control less than 50% of it, and you have the 100 or fewer full-time or full-time equivalent employees. So if you own more than 50% of this business with your family members, which can include anybody, parents, sisters, cousins, and even people that you through marriage, you do not have to report this business. And it's similar with the investment farms. So with investment farms, there are companies out there that sell portions of farm solely for investment purposes. You're not actively involved in the participation or operation of that farm. But if you live on the farm and you own that farm and you actively participate in the operation of it, so let's say it's a small farm and you raise some goats and chickens and grow some vegetables and you bring those to market and sell them, you do not need to report that farm here. But as you can see below in the rest of this paragraph, you can read if you are just an investor and you don't live on the farm or participate in its operation, or even if you own the farm but you rent out portions of that to other people to farm, you may need to report that in this application. I know that was a lot of information. I hope it was helpful and useful. If you found it helpful, please like and subscribe. And coming up in our next video, we are going to finish up the FAFSA with showing you how to sign and submit properly this application and get done with the whole process. Thank you.